Hello and welcome to Kitco Mining with me, Paul Harris. We're here in Dawson City in Yukon, Canada at the Yukon Mining Investment Conference. It's a great pleasure to be joined this morning by Michael Gray, Equity Research Analyst at Agentis Capital. Good morning, Michael.
Morning, Paul. Very pleased to be here.
Very pleased to have you. Let's start off with a sort of brief description of who is Agentis Capital?
Yeah, Agentis Capital is an infrastructure advisory firm on the one hand, 45 employees, international business, and then 4 years ago bolted on a mining team, which we're part of. I'm ex-Macquarie. The entire Agentis Capital firm is ex-Macquarie employees. So we provide on the mining side research and advisory, independent research and advisory services, and focusing in the mining side a little bit earlier stage, explorer developers and the odd producer.
Okay. A lot of people, or more people, heard your name this week because you put out a research report coverage on Snowline Gold. Snowline Gold, obviously one of the most exciting gold exploration companies, not just in Yukon, but at the worldwide level. And a couple of highlight figures from that. You're looking at your estimation is 9 million ounces there. You're looking at a potential 500,000 ounce a year production scenario at Snowline. Snowline hasn't yet released a resource, hasn't talked about economics or anything like that. So you've obviously put a lot of work into this. Tell us a little bit about why you sort of put this report together, why you've launched this report.
Yeah, it's something I haven't seen in my career very often. Something big with lots of continuity to depth on strike, right at surface with a low strip ratio, and very exceptional grades for this type of deposit, these reduced intrusion related deposits like Fort Knox and like Eagle. So the reason we could be fairly bold, we put the resource database together and put a pit constrained element to it. And we're able to see tremendous continuity of a starter pit above 2 grams, about 3.4 million ounces based on our estimates. And then globally at about 1.3 grams, 9.4 million ounces. So it's that consistency of grade and the continuity laterally that really convinced us we needed to bring that to the market's attention. And then subsequent to that, coming out our resource, we did put a DCF model on this. It's about $1.7 billion NPV after tax, about a 40% IRR, but it's simple. It's a low strip ratio, 30,000 tons per day, 500,000 ounces per year, as you point out. And that puts it into a special league of super tier one as far as we're concerned. There's only a few assets in the world. Most of the seniors have them in production. So we think this is going to be part of the M&A going forward in the Yukon.
Okay, and it bears repeating that this was an independent report. Snowline didn't commission you. So in terms of your sort of motivation to put this out, is this a way of you've been able to obviously to showcase your abilities as Agentis, and is that a way of engaging with clients and being able to attract more clients?
Yeah. We at Macquarie and other firms I've been at, are part of our calling card is to focus on best of breed and be the first to cover certain stocks. We were the first ones to cover Canadian Malartic, Cisco, things like that. And so when we see something exceptional, and most of our clients are institutional fund managers globally, we want to bring it to their attention as soon as possible. And as mentioned, I haven't seen situations like this very often where 10,000 meters of drilling can generate the scope and scale of endowment that we estimate. So having a background with senior mining companies, having formed a junior at one point and then pivoting to the analyst world, this was a fairly high conviction call and early call last August. So we want to be there, focused on very rare, exceptional opportunities for investors.
Okay. You're also a director of High Gold Mining, which has a project in Alaska. Yep. You've been involved in the launch of Cascadia Minerals, which debuted on the TSX, I think it was this morning or yesterday.
Yeah. Full disclosure, our firm they advised on the ATAC Hecla transaction. And so that's just started to trade today. I don't own any shares in Cascadia, for full disclosure, but that's an interesting one you bring up because as a spin out the management team has decided to go more on critical minerals and copper gold, and made a raw discovery in the Yukon that has some elements of red chris geology, which is all about having the right age and style of mineralization, potentially in alkaline porphyry. So I think that's going to attract some attention. It's one of the things I'm quite focused on.
Okay, thank you. Let's talk about capital markets. Given your background and obviously Agentis, your role in position in the markets, tough times for exploration companies in general, particularly for precious metals. There are the exceptions, such as Snowline. What's your view of the capital markets and where we are in the cycle? And when do you think the explorers, the developers, are going to start getting some love?
I'm glass half full type person, so I'm hoping in September we get through the summer doldrums and we do have a resurgence of some positive sentiment. I think it's going to be a haves and have-nots market, though. You're going to have the juniors that actually have some good discoveries, some torquey results, and good management messaging those results. And then you're going to have the ones that are struggling, maybe haven't quite got the project, and it costs, as you probably know, it's about $750,000 a year just to keep the lights on in a junior. So investors don't want to keep on funding keeping the lights on. They want these torquey results. They want some really good price action. So I think there's going to be some stars in the fall in terms of new discoveries that come out from this season in drilling, because the assays are still pending. And then I think those will be the winners. And I think the sentiment will build in the fall, especially if we see the rate hikes, finally end.
Okay, the gold price is currently around sort of $2,000 per ounce, which, if you're a producer, that's quite a healthy figure. $2,000 an ounce. A lot of companies are making, some pretty good, healthy margins. But there seems to be a big disconnect between the producers making money and the non-producers who are, really struggling. What's it going to take for that distinction to disappear, or will it disappear?
Well, it's a great point. I think that the capital markets are in a sense broken. The traditional large funds that were coming down the food chain to fund the juniors have gone up. They've concentrated their portfolios, and they've gone up the food chain mainly into the producers and the royalty companies and the odd explorer developer. And the issue right now for the explorer developers is lack of liquidity. Fund managers really can't take on that lack of liquidity, trading liquidity, with some exceptions. So we need to see results driving interest in the juniors, maybe certain plays and their derivatives, like the Snowline. There will be derivatives to generate that liquidity and the interest, and maybe M&A would be part of that. Okay,
now. As we mentioned, you put out your report on Snowline. Is that something that, going forward, is that something that Agentis is going to look to do more of? And what I mean by that is putting out these well-researched reports on other companies, on other projects, to perhaps shine the light on things that the market should be paying attention to.
Yeah, we have a coverage list, about 22 stocks. We also recently put out coverage about 2 months ago on Western Copper and Gold, with a high conviction on Casino. So that's a deep dive in terms of that project, which would be Canada's largest copper equivalent producer if that goes into production. And the way we've differentiated ourselves is to focus on the electrification thesis. This was brought up by the Premier in his address this morning, that there's talks going on with the BC government. And if that happens, electrifying the Yukon will unlock not only Casino in terms of being a green mine. Rio has a toehold position along with Mitsubishi. It'll also unlock the eastern part of the Yukon for fireweed and the other critical minerals associated with their zinc and their tungsten. So that's really important to us, not only picking companies, but picking themes. So we have a theme in the Yukon of infrastructure. If that infrastructure comes in, if you build it, they will come, would be our view. And right now we're pivoting to the Yukon being a major focus for us thematically.
Okay, so you obviously like Snowline. As you just mentioned, you like Casino, which is Western Copper. There's 15, perhaps more other companies here in this room, in this theatre where we're doing this interview. Who else do you like in Yukon?
Well, I've done extensive site visits, and some I'm incubating and processing the results, but I certainly like fireweed. I think they've done a lot of the right things on the critical minerals front. So they have the zinc and the tungsten, and well-managed company. Was out to site before this trip. Cascadia, as mentioned already, I think these raw projects that are close to infrastructure and road infrastructure, I think those are going to take off fairly quickly. I think copper is going to be embraced by the market. And then, some of the derivatives. I think as Snowline continues to ascend in market cap and generate investor awareness, I think the derivatives are very interesting. Onyx is a spin out of High Gold. I do own some shares in Onyx. They will probably trade next week. Rakla Gold is a fairly compelling one as well. Early stages out by the Northwest Territories border, Yukon border. So that family of deposits, because we've covered Snowline, not just for the asset discovery itself, but their 30 targets as well, we feel that's very important to the investment thesis. So we'll have an eye on other discoveries or potential discoveries. Those are kind of my top.
Thank you. Now, crystal ball moment, what's the rest of the year got in store for us in terms of copper, in terms of gold, and the sort of the junior developer sector?
Oh, it's a tough one. Well, the crystal ball would be that, for the Yukon in particular, I think it's going to be very busy because you've got Rio needing to make a decision potentially on their investment rights expire in November. So I think it could be fairly interesting for the Yukon should Rio decide to tuck in Western Copper and Gold, and that's part of our thesis. We think that the timing's right, and that really depends on if there's a lot of discussion and visibility on electrifying the Yukon. Otherwise, I think the market sentiment will come back a bit. I think jurisdictions are going to be in focus as yes, you can explore in that jurisdiction, and you can get tremendous leverage out of Canada with the critical minerals charity flow through tax credit, raising money. I think this morning it was mentioned by the government, 170% premium in terms of raising capital. So I think Canada will have really good inflows, along with hopefully good sentiment. And we're happy if metal prices go sideways. We think we're very constructive on copper in the long term, and gold's fine where it is. Be fine if it goes up. We don't think it's going to go down much.
Okay, but do you think that the metals will continue to go sideways through, copper and gold through the remainder of this year?
I think copper's probably got a pretty good chance of going up, but we use the deflated forward curve on gold and silver, and we think they're probably fine if they go sideways, and that's our view, that they probably will. Copper more constructive, that it could go up.
Okay, excellent. Well, Michael Gray, Agentis Capital, thank you very much for joining us this morning.
Okay, my pleasure, Paul.
And stay tuned to Kiko Mining for more from the Yukon Mining Investment Conference.